This is the SPY. This is the morning, Friday morning, pre-market. Notice down here in the RSI, which is Relative Strength Index, we were very overbought.
You're so dumb. You are really dumb. For real.
In hindsight, kinda. Not really. Overbought is anything over 70, oversold is anything under 30 on RSI. So keep that in mind when you're looking at a chart like this. Notice right here, you'd consider this overbought. So you plan on it going back down. When it gets down to a level like here, that's oversold. So you plan on it going back up. It's just a basic indicator. Now, this indicator here in the middle, this is the TTM squeeze indicator. What this tells you is when you are going into and out of a squeeze play. So you'll notice the red, the bright red rather, candles going down. That's when you're into a squeeze play on the downside. The lighter red here, faded red rather, on the way back up, letting you know you're on your way back out of that downside squeeze. When you get to the green, you're going in a positive squeeze. That's how it goes. So, being more specifically, you would be short, you would be squeeze. You would be short, you would be squeeze. So, that's what that indicator is for. Again, nothing's perfect. They're just general lines on a screen, some would say. But here's the morning, Friday morning, pre-market. If you looked at RSI and you looked at the squeeze indicator, both signs kind of indicate that it was going to open up low. I mean, it's just how it's going to go. That's fine. We're not worried about that. I personally don't play right off the line anyway. Now this thing gapped down pretty heavily. As soon as it opened up, we went down to 393, looks like 34 on the low, and we started to creep back up. Now, let's get in here. Notice the squeeze indicator on the short side. Down when we hit the very bottom here at 393.34. The squeeze indicator was pretty accurate. Kind of nailed it, to be honest with you. Turned it right back around, let us know that we were coming back out. We were starting to elevate. Now, also verified by the RSI here down below. Notice that when we were coming out of the squeeze, we were elevating in the purchase, the strength, and all of this was showing that we were going to come out of this little hole. And that's fine. I had no problem with that. This all makes sense. Every piece of what's in front of us makes sense so far. So we get to the top of this squeeze. We get to a decent level in the RSI, not a very high level, but high enough where you would be on the odds would be on your side that it could be turning around. Let's just say that. Now, if you couple that with other indicators, never rely on just one, you make decisions. And that's what I was doing on Friday. So I get to the top of this squeeze. We start to shade out. You'll notice that we're starting to go down. So what I'm looking for is this candle right here, which was a big rejection to the upside, but it was also a rejection to the downside in hindsight. Fact of the matter is, it ended up continuing to rise RSI while it was going down in the squeeze play. So during this moment, I was still in the put. I'm thinking, give it a minute. It's gotta go. But it didn't go. As a matter of fact, it exploded right here. That candle right there kind of killed my play really quick. I play very quickly. I don't like to hang out. I ended up getting stomped out for a $25 loss. Not too crazy. Got out of it, but I was kind of frustrated and confused. So what I ended up doing was I waited until I thought this thing was done chooching, which was right about here at 396.76. I ended up taking out a put, because I was in no way, shape, or form taking calls at these levels. That would have been nuts. Right? So I took a put out right here at 397. And I was very proud of myself for a couple minutes. But it didn't last long, as you can see. So I get here to 396. I end up pulling out a put for 397 at 5 days out, thinking, you know what, I'm going to ride this sucker. It's definitely going to die. No big deal. RSI starts cooling off because of this consolidation period. And unfortunately, because of that, that's what allowed this thing to continue to run. It went into what they would consider a short play right here. The squeeze play was massive, instant correction. What are you gonna do? I held on to it. I'm still holding on to it. And the sucker proceeded to rise throughout the rest of the damn day. Stayed above, or on the top half of RSI pretty much the whole freaking day. The whole day was just a squeeze play. I mean, look at all this squeeze, 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 squeeze. Unfreaking believable. We all got stomped out. There was quite a few of us, so I don't feel too bad. I'm certainly not alone. But I am still holding 397 put that expires next Friday. And I plan on this thing dumping really heavily. Now let's go back and figure out exactly why I'm an idiot. And why I missed, which should have been pretty obvious. Number one, the SPY retraces almost every freaking time. It's eerie. Let me show you. Let me show you some local examples. Here's one. Massive dump, instant retrace. Dump, retrace. Dump, retrace. Dump, retrace. There's another dump and a retrace. A big dump and a retrace. And it's not like long-term retraces. These things happen quickly. When this thing makes big parabolic moves, it makes big parabolic moves in the other direction. You kind of capitalize on that in most occasions. Dump, retrace. Dump, retrace. Now notice this is micro, right? We get in here and we get close to this thing and we can continuously see dump, retrace, dump, retrace. It just doesn't end. Now with the exceptions, there are exceptions. Don't get me wrong. It's going to dump occasionally and it's not going to freaking retrace. Or it's going to go in the other direction like it did on Friday. So you look at this guy here. It's an interesting outlier. Market open, gap up. Typically this thing would go blah, 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 and retrace right back to where it started before it chooched off and fired off for the rest of the day. Not what happened there. So it's not a guarantee, but it is pretty common. It's something to look out for. Big parabolic moves typically followed by big parabolic retraces on the SPY. So I was counting on that. Kinda. I wasn't counting on it enough, clearly, because if you look right here, this thing gapped down, and clearly it was going to retrace right back up if you look at the rest of the SPY, like I just showed you, and like my rules that I violated, state. But, alas, it's not what I did. So, I ended up losing on that one, got stomped out. Now let's look at another reason why I'm an idiot and didn't pay enough attention. This thing here, again, RSI above 70 is overbought. RSI below 30 is oversold. So let's take that principle and put it into play here. I'm at 68 RSI. Right there. 68. Almost overbought. Most people would assume that is overbought. And if you're playing quick plays on SPY, when it comes to options, up or down, we don't care. That is overbought. And that's an entry. Notice what else is going on where that mouse is sitting. Right here, in the squeeze play, we're at the top of a tier. Also a good sign. Great place to take an entry, you would assume. And I'm sure a lot of people did. But they got stomped out because of this muddy water bullcrap that ends up killing you. Ruins an option. This is time decay crap. It'll just kill you. And then over time, it just escalates and stomps you and there's nothing you can do. Frustrating process. However, if you would have looked at the damn RSI, Sean, you would have seen that this thing never really was overbought. It stayed right where it belonged all day long. And just occasionally had spike squeezes. Now where was the retrace is the question. It wasn't until the end of the damn day we saw one at all, but that's because the retrace should be next week, I'm hoping. I'm looking for Tuesday, maybe Wednesday, to be a really big day of reckoning on the SPY. I don't think this is going to hold. And I only say that because there's no reason for this. This shouldn't have happened. There's no good reason for this. Inflation's come down a little bit as far as those numbers have been released, but what's gone on in your life that makes you think any of this makes sense? Is anything getting cheaper? I mean, shoot, you can hardly afford eggs. I don't think this is going to work out so good for a lot of folks on Tuesday. But I am on the downside currently. I'm on the put side of things, so I'm okay. Now, let's get the last thing I want to show you. in regards to why I'm an idiot and need to pay more attention. Let's do a Fibonacci retracement and see what comes up. Click in here, Fibonacci retracement. Notice I started when I right-clicked at the bottom of the chart, right where I wanted it to open. And if you do that right where you want it to open, you only have to click once, and then you are already dragging to the top of your target. This makes this UI a little bit easier to deal with, in case anybody gets into the Webull stock trading desktop UI at all. So, zooming in, all sorts of evidence in here as to why I screwed up on Friday and should pay more attention. Number one, based off of this, we go up, we hit our head against this thing. I'm immediately thinking it's time for a short, but if you look down here, we're still going up in the squeeze, which means that this is not time for a short, and we're also in the middle of the RSI on the upside, which means this should have continued. So I evaded what I was looking at and listened to reason by following these two principles here and here. But what ended up happening is it chopped for a moment, dropped underneath the Fibonacci line. Its fake out came right back above, closed a candle above that line. Now when it closes a candle above this line, that means that it's got confirmation and it's ready to go, which, proved true. Completely, unfortunately, proved true. And I wasn't paying attention. Notice, when we get up to the next line, we break through the line, but we get a rejection in both directions. So really that candle's negated, and this is the candle to pay attention to. What happened here? Well, it ended up closing slightly above. The next candle was the one to focus on then, because that should have gone either up or flat, like these two. It ended up dropping, showing us that we had negative movement. We were in a down moment. So all of this means that this should have started going down. People entered here. They got stomped out too. Turned right back around, fake out, right back up to high RSI. A little bit of consolidation to get the RSI to cool off a touch, just to allow it to bump again. Little bit of consolidation, just to allow it to bump again, and it just continued all damn day. But Fibonacci lines, they were pretty on point all day. Comes down here, hits the rejection, so we're going up. Comes up here, clears it. Slight rejection, bounces off the line, here we go. Rejection. Ends up clearing through the line, opens a candle underneath the line, which means we're going down. Turned it right back around. Now looking at the Fibonacci here, it's pretty obvious that, man, when this thing hit the bottom, every time it hit a Fibonacci line and it gathered support, it just kept climbing to the next line, gathered support, climbing to the next line, gathered support. Look at this consolidation period, allowed for the RSI to cool off down below. And that allowed for another voluminous push. It just, a perfect storm, to be honest with you. But the Fibonacci never lied. The Fibonacci was on point throughout this whole process. A lot of people thought this was a turnaround point up here. We banged our head against that fib line 1, 2, 3, 4, 5, 6 times with that final rejection before it finally broke it. Now I think because of that final break after 5, 6 rejections, that's what really shot that sucker to the damn moon at the end of the day. But I didn't have my fib lines up. I was looking at RSI, I was looking at the squeeze, I was looking at the moving averages, I was looking at the VIX. I mean, I was looking at everything but apparently what mattered on this one. So that's on me. So why am I doing this? Some of you might wonder, why would I be showing everybody how bad of a day I've had? Well, the fact of the matter is that this channel is learning to take money with Sean Glenn. And I didn't learn to take money that day, so I'm going to make sure that everybody watching this learns from my mistakes at the very least. That's what this is all about. You put in safe parameters, you put in stop losses, and you can learn some stuff. You go in balls to the wall and put all your money in, plus your rent, and sell your wife's car, well, you're going to end up in trouble. So don't do that. That's not what I did, clearly. I mean, even at what's happened today, I've only sustained $25 loss, realized, and unrealized might be a couple hundred right now maybe, but that might change next week. Let's keep our fingers crossed. But point of the matter is, learn from my mistakes, learn lessons from what I'm telling you. I'm not going to lie to you. I'm going to show you everything I'm doing. I am fallible, and I'm kind of mediocre at this stuff. So learn with me, but pay attention. This stuff matters. Thanks for watching.